What are the various forms of business ownership? What are the advantages and disadvantages to each? Are you confused? Hi there, my name is Kenner French and I'm with vastsolutionsgroup.com, where tax, finance, and artificial intelligence meets for entrepreneurs. Clients have said about us such things as, over the years, you have saved me approximately $1 million, end quote. As a business grows, its structural needs may change. Changing the structure of your business will have long-term implications, so consult with an accountant or attorney to help you select the form of ownership that is right for your company's evolving needs. Now, in making a choice, you will want to take into account a number of things. 1, your vision regarding the size and nature of your business. 2, the level of control that you wish to have. 3, the level of structure you are willing to manage. 4, the business's vulnerability to lawsuits. 5, the tax implications of different ownership structures. And finally, 6, expected profit or loss of the business. Now, also, whether you need to reinvest earnings in the business, and also you need access to the cash out of the business for yourself. Now, here's an overview of the 4 basic legal forms of ownership for small businesses: sole proprietorship, partnerships, corporations, and LLCs. Now let's go over sole proprietorships. A vast majority of the businesses start out as sole proprietorships. These firms are owned by one person, usually the individual who has day-to-day responsibility for running the business. Sole props, as they're called, own all the assets of the business and the profits generated by it. They also assume complete responsibility for any of the liabilities or debts. In the eyes of the law and the public, the owner is the business. Partnerships. In a partnership, 2 or more people share ownership in a single business. Like proprietorships, the law does not distinguish between the business and the owners. The partners should have a legal agreement that sets forth how decisions will be made, profits will be shared, disputes will be resolved, how future partners will be admitted to the partnership, and how partners can be bought out, or what steps will be taken to dissolve the partnership when it's needed. Yes, it's hard to think about a breakup when the business just is getting going, but many partnerships do split up at times in crisis, and unless there's a defined process, there will be even greater problems down the road. They also must decide up front how much time and capital each will contribute, etc. Now, corporations. A corporation chartered by the state in which it is headquartered is considered by law to be a unique entity, separate and apart from those who own it. A corporation can be taxed. It can be sued. It can enter into contractual agreements. The owners of a corporation are its shareholders. The shareholders elect a board of directors to oversee the major policies and decisions the corporation has, and it has a life of its own, and does not dissolve when partnership changes, by the way. Sub-S's or sub-S corporations. A tax election only. This form of ownership enables a shareholder to treat their earnings and profits as distributions and have them passed through directly to their personal tax return. The catch here is that the shareholder, if working for the company, must pay he or she wages if there is a profit, and those wages must meet standards of, quote, reasonable compensation. This can vary by geographic region as well as occupation, but the basic rule is to pay yourself what you would have to pay to someone else for doing that exact same job, as long as there's enough profit. If you do not do this, the IRS can reclassify all the earnings of the profit as wages, and you will be liable for all payroll taxes on the entire amount. Now, limited liability companies, or LLCs. The LLC is a relatively new type of hybrid business structure that is now permissible in most states. It is designed to provide the limited liability features of a corporation and the tax efficiencies that are operational flexibility of a partnership. Formation is more complex and formal than a general partnership. The owners are members, and the duration of the LLC is usually determined when the organization papers are filed. The time limit can be continued, if desired, by a vote of members at the time of expiration. LLCs must not have more than 2 of the 4 characteristics that define corporations: limited liability to the extent of assets, continuity of life, centralization of management, and free transferability of ownership interests. There are many options available to today's business owner. By determining the appropriate form of business ownership, it can be complicated, such as, a legal professional really should be consulted, by the way. Now, we internally do a number of projects outlined as to what I have already said. We have strategic alliances with law firms, so we can do the interface between the client and the various different law firms, and we have strategic alliances with a number of different law firms that specially work in this field. If you're interested, please check us out on the web at www.vastsolutionsgroup.com or give us a call at 888-808-VAST or 8278. Thank you for taking the time. Once again, this is Kenneth French, and hopefully this has been of value, and if so, maybe pass it on. Once again, it's been a pleasure.